Welcome to TradeTheMBI.com. This is John. This report is for the 23rd, and well, we start off the beginning of the Trump presidency, and I think there was just no real clarity for the market in some of the descriptions. I think it's still up in the air as to whether some of the legislative ideas are going to be expanded upon. So I think we're just sort of in that soft malaise here. We've sort of had a decline. At least in the readings, we're not seeing it from a price action because there's really nowhere else to put money at this particular point. So we've had a complete reset and not quite oversold here. This is what I was talking about, being in this, what I call the no spark zone, where you kind of turn around, and unless we move back up above the negative 7.5 on the DOC here, it's likely to be just a soft, I want to just say, a little more sideways. We were expecting a little more volatility. We're seeing a little bit of a downdraft, still minor at this particular point. I think there's just this huge debate right now as to where things are going to go, and I think you've got a lot of pessimistic, at least financial articles that you're seeing about the headwinds that exist, and yet the other side of the coin is the potential for optimism with growth issues. So we're sort of just, I guess, a continuation. We've got super strength in the euro at this particular point. I think the realities of where things are not quite as bad as some of the fears, and so that's elevated the euro, which is sort of interesting. Certainly supports improvement in the S&P, one would think, and whether we start to see that translate into a return in equities there remains to be seen. I still think there's more potential for upside. Some of the gloom and doom might be a little bit excessive. We are expecting a continuation of bond retreat. The reality of a higher interest rate environment is just likely. How soon that translates, though, into actual trade, we're going to begin to see. I think that just the likelihood of the volatility starting to rise, I'd be looking at the VIX to begin to see that from an upside trade, and it won't take much of a down move to really start to accelerate the VIX. And once that happens, I think there's a significant enough of a short trade going on there that you could have a potential explosive activity, and that could create more of a downdraft and a force of some realignment. Oil continuing to maintain right in this range, and again, that softness, as well as just this lack of movement, is sort of the status quo, and until there's some either determination that there's less or more economic activity, it's going to stay right where it is. Supplies are certainly through the roof, no question about that. Gold is going to still continue to be, I think, the up trade overall, and probably the bigger returner in general. If we look at a 5K standpoint, opened up weak with the short signal, and well, that was even ending from the Friday, and then that downdraft continued all the way through from a significant plop down. We can see that while we're getting strength early on here from a 5K, you don't have a reset of the orange, and that suggests that you're going to continue either soft or declining. So not exactly super exciting from the beginning of the week. I think, though, that the potential as ideas get laid out, and then in this coming week, we're going to start to see a lot of different trades take place, and that's going to create really that exciting volatility that will give us either rotations and or a depiction as to whether or not things have gotten a little bit ahead of where the real world situation is. And in that case, we're going to see certainly some traders back and forth, maybe even increasing some cash positions, and that will certainly do exactly what we thought, which is an increase in volatility. And certainly we're going to be able to see how that plays out within our readings. I don't see it as problematic for us. It's just going to be choppy, I think, really back and forth. And I think there's just going to be swings that propel themselves one direction or another, as these algos can take advantage of inequities in the supply. both long and short, and so that's just going to create the movement, which is really what we need to see, is a little more volatility. At least from a trade standpoint, longer term, I think the upside bias is still in existence until we see something that should cause us to be more alarmed. And uncertainty is not always a bad thing. It just sometimes creates a little delay in reaction, and that withdrawal of liquidity can actually create a little bit more action, which in turn will give us bigger swings. And that's something to be looking for. We'll continue to post the charts and update as indications change with the indicators. You can see here the test work continues, and so I'll continue to add to that. As always, though, trade well, and we will continue to figure out what's going to go on with this market in the weeks and months ahead. As always, though, trade well, and we'll talk again soon.